We were speaking with Mr. B.K. Gupta, the Managing Director of State Bank of India, and Tanvi Gupta, the economist from UBS. Mr. Gupta, thank you very much indeed, sir, for your patience. Just taking off from where Tanvi was explaining, there is a problem of household savings making their way into bank deposits. Given that, do you think that there is any chance you will have the elbow room to cut deposit rates?
See, I think you mentioned about the deposit growth rate at around 10% for this year, year on year, and an advances growth rate of between 14 to 15%. See, if you look at the past trend, last few years, we actually had a deposit growth rate which was even lower than this actually. And the fact remains that during last few years, the advances growth rate was even lower actually. So that is why liquidity was not really a concern. In fact, the banks had a lot of excess liquidity, which they invested into government securities and all. So if you look at the liquidity composition of various banks in the country, you will find that there are a number of banks who are in fact sitting on excess liquidity also. At the same time, the RBI has been cutting the SLR ratio. The SLR ratio right now is 19.25. It will go down further also. So, but at the system-wide level, you will find that the system itself is sitting on excess SLR of something like 8–9% actually. So it's a question of the banks being able to convert that liquidity into usable liquidity, which I guess will happen over a period of time. The deposits are coming to the banks. Obviously, the credit growth rate is much higher. So many banks have been using the excess liquidity that is lying with them. But for some banks who don't have that excess liquidity, I think for them it's a concern. So they have been raising the deposit rates also. So if you look at the SBI's deposit rate, we are in fact quite a bit lower than what the other private sector banks offer. So the room for us to cut the deposit rate further actually is very, very limited. And I think that Tanvi made the point about the small savings deposit rates being higher than what the banks are offering. So that again is another factor which will actually prevent the banks from being able to cut the rates further. But you know, the other side of the story is if you look at the inflation rate, and there is a talk in the market that the real interest rates being offered by the banks in India are amongst the highest in the world actually. So I think so you have a bit of a dilemma actually. On one side, the real interest rates are very high, but at the same time, liquidity is not probably available with the banks to the extent it is required actually.
Okay.
So I guess that, you know, for the time being, the banks should be able to manage. But again, you know, the 10% growth in credit in deposits and 14% growth in deposits. But, you know, we are talking of a different base altogether. So if you look at it in terms of a net number, it is not much different actually. You know, 10% growth in deposits and 14% growth in advances roughly works out to almost the same in absolute numbers actually.
Okay. Mr. Gupta, good morning. I'm going to come back to you in a bit, but I just wanted one comment from Tanvi on, you know, we were talking about how household savings as a percentage of GDP has fallen substantially over the last few years. Tanvi, morning. You know, household savings, one, is a major source of investment funding. So that is a concern if it falls, and it has. What's your thought on that? And if this declining trend continues, will it not pose a serious challenge to GDP growth as well?
Well, I agree that higher savings is very critical for the economy to move on the higher growth path because that funds investments. That said, if you look at the breakup, the fall has both in the physical savings and the financial savings right now. And part of the explanation could be that leverage funded consumption has been pretty strong over the past couple of years. So the households were actually declining their savings, income levels were not picking up, and they were going to the banks and NBFCs and taking credit to fund their consumption, and the growth was still reasonably well at 7–7.5%. That said, now what we are seeing right now is that the NBFC sector as a whole is slowing down. The sources of funding shifting from NBFCs to the banking sector. The household savings, in our view, has kind of bottomed out. So gradually, we only expect it to improve from here. As capex comes back into the system, we start seeing and inflation has been remaining low for longer. I think the intensity to consume will narrow and gradually we'll start seeing that the saving levels in the economy start picking up. But yes, you need the right conditions in terms of income level growth, the job scenario for the saving for the household sector as a whole to pick up.
Okay. Well, so Mr. Gupta, you know, are you confident that credit growth can grow even beyond this because you will continue to have this deposit constraint? Will we be stuck at 14%?
No, I think 14% credit growth, again, if you look at in terms of your GDP growth, or the real growth actually is somewhere around 10%, so 1.5 times of your nominal growth, so which I think should be comfortable. Okay. At the same time, on the liquidity front, I think RBI has taken a lot of steps, starting with the cutting of the SLR on a regular basis, which they have been doing, plus this swap window, which they have made available on 26th, that will happen. Yeah. Plus, you know, the buyer's credit again has been reintroduced. OMOs have been done very continuously. But we do believe that, you know, India is one country which still has both the SLR and the LCR. Now that the LCR 100% is fully operational from 1st of January, so maybe there is some room to cut the SLR further for the banks, which I guess will happen going forward at some point of time.
So what is the elbow room?
So I don't really see too much of a concern on the liquidity.
What is your SLR?
As
no, what is your
concerned? I think.
So, no, what is your holding in government bonds, and therefore what is the excess you can win?
Our LCR is still somewhere in the range of. Yeah, we still have quite a bit of excess. You know, on the LCR requirement is 100%, so we are still at 135%. So there is a bit of liquidity still available with the banks. So I don't think that we have liquidity concerns at this point of time. And I guess that is the case with most of the other public sector banks also. So maybe they were constrained a little bit on the capital side, now that the capital has been infused into many of the banks. So I guess there should not be any problem there.
But what about a fresh credit disbursal? I mean, we were talking yesterday as to how, you know, one of the fear in the market is a lot of the credit growth is to buy out NBFC loan books, and a lot of fresh credit disbursal is not happening to sectors like real estate, infrastructure, etc. Is that true, Mr. Gupta? I mean, maybe not with SBI, but for the rest of the industry?
No, some bit of credit growth did come for the banks from the buyout of portfolios from the NBFCs. And I think some of it will probably continue in the year, next year also. But at the same time, number of NBFCs have reduced their credit disbursements. So some of that will again come to the banks. So we are projecting a credit growth of around 14% for the next year also, which we think is achievable, which is not a very high credit growth rate for the country as a whole, which will probably be split equally between what we see from the industry or the manufacturing as well as from the personal loan. The personal loan side, the credit growth continues to be very, very robust. There are a lot of things which the banks were not able to do earlier. Now the ability of the banks to offer personal unsecured loans to the customers is, you know, very high. So we are able to do that. We are seeing very good growth there. So around 14% of credit growth for the next year, I think, is very reasonable, and I think the industry should be able to do it without much difficulty. Yes, liquidity is a concern. I hope that the steps RBI has already taken, and plus what they have already planned, should be able to help the banks to meet that target.
You said that the swap window has helped to bring down rates. Are corporates able to borrow cheaper?
No, the corporates, I don't think there is any problem as such with the corporates borrowing. You know, again, the credit growth, if you look at the components, quite a bit of it has come from the government. Government has been spending quite a bit on the infrastructure side. There has been a bit of a trickle down that also. The EPC companies, there are a lot of other people who are doing the government contracts. They have been borrowing. Yeah. There is a recent RBI reports which they talked about the private sector capex also being seen.
So that is exactly the point.
So, you know, that's the growth does. Yeah.
You know, the argument we heard...
As of now, I think it's looking good, actually.
Okay. No, Mr. Gupta, what we heard was exactly that government is a big borrower, as well as Sonia was pointing out, you know, buying up of NBFC loans, and thirdly, personal loans. All this leaves very little money for SMEs and MSMEs. Is that a fair worry?
No, I think MSMEs also, there has been a fair bit of credit growth in that segment also. So what we are seeing is around 10% growth in the MSME segment also that is happening. Plus, you know, that this committee, it's already been set up by the RBI, looking into various factors and how we can look at growing the credit growth for the MSME segments also. So I think the committee has asked for the comments from public also. So let us see what can be done more. But as of now, I don't think there is any issue as far as the credit requirements of the MSME sectors and the bank's ability to fund that are concerned. Actually.
Okay, so before we let you go, we have to ask you about JET. Should we see a resolution? Is it true that the big shareholder Etihad is refusing to put in money? I mean, are you looking for another shareholder altogether?
But you know our policy now, we don't talk about individual accounts. I don't think it will be right for me to talk, except to say that, there are a lot of negotiations which are still going on.
Okay. All right, Mr. Gupta, we'll leave it at that. Tanvi Gupta Jain, thank you very much for joining us in this conversation. There is a genuine problem of falling savings and falling deposits, or at least slowing deposits, which is making the cost of credit expensive.